So RDHL was a stock we had on watch in the pre-market in the community on Monday morning. This trade was a straightforward layup. This is a bread and butter short selling strategy. If you can understand the mechanics of what is going on behind the scenes, you will be that much more prepared the next time this opportunity presents itself. So why did RDHL skydive on the FDA news? For me, it's about understanding where the insiders are and what they are doing. One of the first things we teach our students in our online trading school is that the market is divided into two sections. The inside of the market, which is all the insiders, and the outside of the market, which is all of us. So let's take a look at one of the beginner sections in our 3-month training program at Zenfire. Repeats itself over and over. Now, does anyone see what is happening here? What do all these fundamental principles of the fence have in common? You, the outside market participants, are coming in to buy from the market. The market is baiting you in with an item that you think is going to increase in value, and the market sparkles that item to make you think that. The inside of the market is selling that item to you, which means they already own that item. Now, the sparkle that the market lures you in to exchange your important money for that valuable item is that you will be able to sell it at a higher price and make money from it, which is correct. If you do that, you will make money. But everyone overlooks the simple fact is that the play, the purchase, the event, the buying is already done. They are selling to you. Now, after they sell to you and threaten the value of your... And so in our case with RDHL, the sparkle they used was the FDA approval. The move was already done. The insiders were all in under $8. The plan was to gap up the stock on the FDA approval and sell into the massive liquidity it created. New traders always forget there needs to be a buyer matched up with every seller. And if I have 2 million shares that I want to sell, I essentially need 2 million buyers to step in and buy for me. Now, if there's no liquidity, then selling those shares will destroy the stock price. But if there's great news and a lot of sparkle, there will be plenty of buyers coming up to the fence to buy from all the insiders selling to take the bag. Now, if you look on the weekly chart, you will see we just did 2 million shares the week prior under $7. Who's buying that? Not you or me. And in the pre-market of the news release, they sold 1 million shares and sold another million in the next 15 minutes. They have to get these shares sold as fast as possible while all the buyers are lining up at the fence to buy. Because if the liquidity runs out and the buyers disappear, them selling these shares will destroy the stock price. And they don't want to do that. They don't want to kill the goose that is laying the golden egg. The stock market essentially is just a money machine for the insiders. You, the outside market participants, are the liquidity for them. Once all the buyers are loaded up pre-market, thinking this stock is going to go to the moon because of whatever sparkle they used, and in this example, we had 1 million shares sitting above 8.4, all new owners. Once the market opens, the insiders have to take advantage of all the new buyers rushing up to the fence to buy who don't have pre-market access. This causes a massive chain reaction that feeds on itself. Not only are the insiders still selling their shares outward to anyone coming up to buy, but now the 1 million new day traders who just got in pre-market are all being dragged underwater, and they start panicking and selling too, stopping out and cutting their losses quickly. More buyers are coming in to buy the dip, thinking they're getting a great deal, and once the inside selling overwhelms them, they panic too, causing further washout. And we had a perfect example of that on the 2-minute chart right here. It essentially just keeps feeding on itself until heavy inside buying comes in and props the price up. Now, I'm not saying the stock can't go higher, and I'm not saying the FDA approval or this company was junk. That's not what this was. If you're new to trading and got burned by RDHL on Monday, you need to understand there's a massive difference between the perceived value of a company and the mechanics of the market. That's what we teach here at Zenfire, the actual mechanics of what is going on. Because I didn't make it as a trader until I firmly understood these mechanics. You cannot beat or outsmart the market. All you can do is try your best to line up with what the insiders are doing. Let me know if you have any more questions about this topic. We're going to pick RDHL apart more in the private and group sessions of Zenfire, and I will see you all in the community.